with the recording? Okay, I see you've already started. So, hello everyone. Thanks for participating. I hope it's going to be interesting and valuable time for you. We're going to discuss on how the companies should behave if they are in a good situation during the crisis. This is just to remind you of the Inovo team. Not everyone is on the call today, but we have Tomasz Swoboda, our funding partner, myself, Ariel Finkelstein, our advisor and colleague from Israel, who will cover most of the topic as he's a been there, done that guy. Kacper Zambrzycki, our analyst, is with us as well, and he was the one putting together most of the materials and actually reading whole internet on the best practices that we later on filtered. Welcome everyone again. And as mentioned in the invites, we're going to record the first part of the session, and then we left quite some time for the questions and answers session, which won't be recorded, so that you can speak openly, and I assume whatever happens during that session stays within that group. For the beginning, just to give the introduction. Okay, just give me a second. So just as a matter of introduction, if you look at the companies that were quite successful, so we took companies that raised more than $100 million. It's actually the last crisis years were good years to start such company, and pre-crisis or just after the crisis was actually not a worse timing than other years. You can actually say it was even better. And when it comes to technology, this was the sector that came out stronger out of both the dot-com bubble, the financial crisis, and we are sure that it's going to be the same during this crisis as well. That's why we're having this session. Also, if you look through the content, there is a lot said what you should do to survive. There is not much information about how you should be running your company in order to win and benefit from the situation. We already see there are branches that are booming with the current situation. I mean, people's behavior has changed significantly, and you can see it with the grocery shopping, you can see it with telemedicine, with electronic signature, etc., etc. One thing to be aware of is that some of this is short-term and some of this is long-term. And you should really understand well in which bucket are you. Is it the demand that is growing temporarily, or is it something that is here to stay? There are some industries that just got an acceleration of a few years thanks to this corona crisis and all the social isolations, but there are some that are most likely going back to the demand pre-corona. So this is basically harvesting time, and you should really use this window of opportunity. If you look at the duration of last recessions or crises, it was from as short as 6 months to around 18 months. So we're already 1 month into the crisis, and truth to be told, it might be very, very little time, or it might be quite a lot. But if the crisis situation is something that is affecting your company positively and you are winning thanks to that, you have a short window of opportunity to maximize the outcome of this situation for your company. So that's why you really need to take decision fast. You need to make sure these are the right decision, and you need to be focused on the right things. I hope that we're gonna jump into the more operational stuff right now. I hope that this will allow you to really spend your time and efforts and resources on the things that will benefit your company the most. So Ariel, over to you, and I'll be happy to switch your slide as your assistant now.
Great. Can everyone hear me? Great. Okay, so first thing, pleasure and thank you, Michał. Before I start, I want to put two things on the table to explain. The first thing, as Michał said, we're talking today on to the successful companies, the ones that won the lottery, right time, right place with the right product, and everything is going well. Not the ones that are in problems right now. And that's going to be very influential in what we talk about today. The second point, mainly focusing, talking to the CEO, founder level, in a sense of leadership in these times. One of the main challenges is how to lead my company in these times. We're bombarded. There's a lot of stuff to be taken care of. Majority of the companies at these stages are more early stage. That means that I'm a one-man show, or maybe I have another someone beside me, but a lot of the stuff I need to be involved in. And that becomes like a very, very challenging time, although things are good. And the third thing also is that I'm focusing on the winners, people that want to win, not only survive or enjoy from the ride right now, but really want to become the winners out of these times. So let's dive into it. This, if there's something I want you to come out of the call today, is this slide. At the end of the day, this is a cycle that you're going to have in the coming 6 months. And with all my companies, that's exactly how we work on a weekly, daily, and also monthly level. This is a cycle. And it starts from resetting your mindset. Everything that we thought about before, forget about it and think about it again. And in all the different points, from the strategic points into the operational points. Forget about what you thought about investments. Is it relevant for me, yes or no? M&A, is it relevant or not? HR, what kind of people I'm looking for? All the things, reset it and think about it today and analyze from what you currently know, what you currently understand. And every day we're learning new stuff. And that's why all the time, this is why this is a cycle. Every month I'm learning again and again exactly what's going on. The second point is focus. You need to be very, very clear focus, especially in the successful companies right now. I have so many leads coming in, so many good things that are happening on the one hand side, but I have too many things that are juggling. My team is not built for that. And I need to focus on the more important stuff. And majority of the guys just don't know how to focus. Okay, and then I'm juggling between a lot of stuff and I'm not doing it well. And that comes to execution. Can I really execute well? And in order to take all these pillars and work correctly with them, if you do it, you can become a winner. Now, I'll give an example. Okay, so I'll give you good and bad examples. A good example is a company that I have the privilege of working with. And what we discovered initially was that we had to move into profitability. We were aiming for growth. We were aiming for a round and building the company for that. And we discovered that no chance that we'll be able to do a round at these times, okay? And that's why we aimed the entire company into profitability. And we were able to see from our numbers that we can get there and also from the DNA of the company. But that reset in the mind wasn't easy because the entire company was built into growth, and especially from last year into this year, and it was running into growth. That was the main DNA of the company. And straight away when we decided this, we were able to not only decide this thing and analyze it, but also focus our entire management team, our investors, and the CEO was able to focus everyone on one word, which was the only word that we cared about: profitability, EBITDA. That's the only thing. But we were missing one important thing because we wanted to know exactly where we're standing. And on the daily basis, which I want to see, and that's one of the main things that in order for us to be focused and execute well in it, we have to look at it on a daily, weekly, and monthly dashboards, okay? The CEO level can look at it and know exactly where we're standing. One of the main challenges in the majority of the startups, we don't have good BIs. And again, we don't have the time right now to build all the BI, but I do have time to build a specific dashboard that can really help me right now. And that's exactly what we did there. And what we were able to do was to build from it a dashboard that included one thing that we were missing. And that thing was EBITDA per day. And that was done quickly within a week work, and we're able to do it. A bad example is a company that I was analyzing, I did analysis on it about 2 or 3 weeks back. And it was a very big turnoff. The reason for that was that the company came to us with the understanding and notion, hey, we have a lot of leads right now that want to close deals with us. We don't have enough people. Give us money in order to sell. And when a CEO sits with you in that sense, okay, so the first question was, okay, what kind of leads do you have and what are you focusing on? And he had a lot of leads from all around the globe, and he wasn't focusing on the right leads. He had, first thing, he had companies that he sold to them in 2019 that were generating for him the majority of the money, but he had already on the table from them. He didn't do a 100% implementation. That means that it was a usage-based system. And they were using only 20% of what they bought from him. And he had another 80% of the money to bring in. And they were all really needing it. And that he put aside, not 100% focusing on bringing that money. Second thing, on the new customers, he was focusing on two different things, two different segments. One, long-term sales cycle that take over 1 year, together with the short term, okay? Instead of focusing on doing land and expand the quickly ones. And what happened was that he has so many leads that it doesn't close anything at the end. And the conversion wasn't good. That's a good example of a company that at the end of the day didn't do the analyze well, didn't focus on the right things, and didn't execute well. That's exactly where I want you guys to come out of it. Each and every one of you guys knows his business, and it's different business, but this is the cycle that you need to do, and you need to do it on a weekly and a monthly basis now. We all forget about our budgeting for a year because nobody freaking knows what's going to happen till the end of this year. And if you know, please let me know, because I want to have that ball that you guys have. And the only way to manage ourselves right now is on that weekly and monthly basis and seeing exactly where we're standing, analyzing that, and also repeating and correcting ourselves. Next slide. Yeah, can you move to the next slide? Okay, so focus. A good example before I dive into it is a company called Zoom. Right now we're using them. So I don't know the internal stuff of the company. I don't know exactly what they had in their roadmap or anything, but they had a huge growth, okay? In the past month, growing from 200 million to 300 million a day, but they had a very, very big and bad PR about the privacy and security issues. And the first thing the founder did was the right thing. Exactly the slide before. Understanding the issue, focusing on that issue and saying, guys, we're going to put 90 days on everything in our development, everything in our product only for that, okay? And executing on that. And they're executing every time. They're informing the market exactly what they're doing. I'm getting emails every week about it and exactly new releases that they're doing. That's how you should be doing it and focusing on the right things. So one of the main challenges that we currently have is that our teams are distributed. Not all of us are used to do it. And a lot of it is, how do I focus my management team on those points? You have to be very clear with your management. And that's exactly what sets you from a good CEO to a bad CEO, the ability to communicate well those main points, which are strategic to each and one of the managers, and understand those points and execute on them. And the second thing is having those very unique KPIs that are related to these strategic points and enabling them, all of them, to see it at once. Everyone needs to see it on a daily, weekly, and monthly basis, okay? For all of us to be focused. And then the BI. Again, the majority of guys are suffering from it. The majority of my companies in early stages do not have a strong infrastructure for that. I don't suggest right now building everything right now, but for sure have very good BI for the specific things that you need to know. And each and every one of you have different businesses, okay? And each and every one of you knows their strengths and weaknesses. You need to know that you're able to view straight away where you're standing and where your business is standing. And if you don't have that visibility into your business, you're going to get screwed. An example for that is guys that are selling no-touch sales. A lot of the companies I'm involved with, we have no-touch sales. That means that today the companies that are successful, we are bombarded with a lot of visitors on a daily basis, but not always the quality visitors, okay? An ability to see exactly the different funnels and how are they behaving, who's coming in, who's really converting well into the different things, and what I should be changing. that's something that I have to have, and have to have that visibility on a daily basis right now. Next slide. Okay, so I'm going to touch several different points today together with Michał. First thing is hiring. The second point is go-to-market and sales, and then pricing, fundraising, and M&A. Each and every one of them, you need to do the cycle that we spoke about in the first slide that I mentioned. Each and every one of them, the set of mind that you had before is going to change. And we're going to talk for them specifically and how to do it and how to focus your efforts. So let's start with the hiring. Okay, so first thing, hiring is something which, when I have, and I'm bombarded with a lot of leads, with a lot of different things that I need to do, hiring is not in my first thing of set of mind, okay? What I need to focus, the first thing is, who do I really need in my company? And majority of the companies in the early stage are missing two things. One is a strong management, and the second thing is mid-level management. You need to know exactly where you're really missing the people that you need, okay? And only the very, very crucial ones, waste your time on that, because at the end of the day, currently I need to be much more focused on operation because I don't have enough time on my table for every day. And you need to focus only the most crucial positions that you really need. If it's not a crucial position that I don't have to have right now, I'm not running afterwards. The second thing, we're going to have a lot of opportunities coming in of good employees, because this is right now starting to be a market for us as companies, and we're able to find very, very good candidates. So I don't want to miss on good candidates. Even if I'm not looking for right now, I do want to have a lookout for it. So I do have a lookout for very, very strong people within the market for different positions. However, I want to focus on the senior guys that are coming in. If it's mid-level managers, or if it's C-level managers, and I want to get them in. But I want to get only the very, very strongest ones that can teach me, not the ones that I need to teach them, because I don't have the time. Right now, I have too many leads. That means that whoever I'm taking in, I want to have the ability to bring him in as fast as possible, not the 90 days, hopefully. And then also, I want to have the ability not to train him very, very quickly, and not to be needing to teach him. Okay, so if I need right now a VP sales, if I need to teach him how to sell, that's rubbish. Okay, or a team leader for that, or a BDR team, or whatever it is. Each and every one of the team members that I'm looking at in a company that is currently very, very successful and everything is growing, I want each and every one of them to be very strong, knowledgeable, and I don't need to waste time right now in teaching him. The only thing I need to do is training on my specific company and my specific product. But he knows his shit, and he can teach me. And the third one is freeze. As much as I can, I freeze. Again, not only for freezing because there is going to be more good opportunities with much better salaries on the employer market, but mainly because I need to focus on my execution. And that's why focusing here only on the most important ones is very, very crucial. Okay, majority of them would be on sales and marketing in the B2B enterprise or mid-level positions usually. Next slide. Okay, so what I want to touch here is two different segments. One is the go-to-market, and the second thing is sales. But before I dive into it, as I said in the first slide, everything changes, okay? Specifically in these kind of times. So the good CEO at this kind of times treats the times like a new building of a new go-to-market. Because at the end of the day, I'm seeing a lot of different things are shifting within my market, and I need to dive into stuff because there's a lot of innovation that needs to be done, and quickly, in order to win the market. Now, in order to do that, you have to be very much involved in the basics of the sales. Go inside, be on the calls, understand exactly the customers, and look into each and every one of the important dashboards, okay, of the funnels of your customers coming in. If it's an automatic sales, if it's an inside sales SMB, and if it's an enterprise or mid-level sales. In all of them, whatever you have, you need to dive in because you need to decide if you need to change the go-to-market. Don't trust anyone else to do it for you. Now, since we are bombarded with a lot of leads, the ones that are really enjoying from it, you have two options, and you see it in different CEOs. One is the guys that say, wow, I have so many leads coming in. I don't need to do too much right now. leave me alone. I'm not going to go into these sales. Everything is coming in. I'm growing 20, 30% month over month. This is crazy numbers. And that's the guy that I call him, the guy that wants to enjoy the ride, which is nice and it's okay. But I like winners. I like people that are killers and want to win. And that's exactly the kind of things that I suggest you guys to be. And winners go in and understand exactly how they can win more. And we're going to touch things in a second, what you need to do in order to win, how to be very aggressive and how to really harm all the competition that you have in order to win the game. And that's exactly the kind of people that enjoy from the current strength and understand from it how they can grow. So the first thing is understanding my go-to-market, okay, and validating, is this the right go-to-market? So there's companies selling, let's say, into enterprise, and you can see that it is selling into an enterprise, and maybe I'll just stop and explain what is the difference between mid-level and enterprise. It's not about a logo. It's not about selling into GE, GM, or whatever it is. It's about 2 points. One is the sales price that I have, okay? And second is the sales life cycle. And if my sales life cycle is long, okay, between 6 to 12 months, if my price is higher than $50,000, which I need procurement, the legal on the way, usually those are considered the enterprise ones. If my sales life cycle is up to 3 months, okay, especially in SaaS and everything, and my average deals is anything between $15,000 to $50,000, and I close it within the 3 months, that's the mid-level, okay? At the end of the day, that's how we look at it. A lot of the times, what we do, we have the go-to-market that we're running after, and we have a lot of leads coming in enterprise. To the example I gave you, and the guy that I was talking to about 3 weeks ago, he had a lot of those guys, but he had also the segment of mid-level deals. And that segment is divided into two. One is people that I can close within a mid-level sales, but they are part of an organization, which is an enterprise, okay? This is the division within GE, and I can do land and expand into those deals. A lot of the times what I'm seeing, and right now I have companies selling it to B2B enterprise, we move downstream into mid-level. And the reason for that is in order to close quickly and dominate the market. I want to win as many leads coming in. And what we do, we're focusing on each and every one of them. And there is a division between mid-level that is really a mid-level logo. That means that I can close you within 3 months and you are between the $15,000 to $50,000, but there's nothing else above it. I'm not going to enjoy more than that versus an enterprise that I could close right now with that time frame and I can grow. And those are the kind of deals that a lot of times you should be focusing on and focusing your deals there. And that's for the mid-level and enterprise guys. For the guys that are doing automatic sales, I have companies, a lot of them, and I had it also in 2008, that we got a lot of automatic sales with lower ARPU, but what happened was a lot of mid-level guys are coming down and that are used to pay, let's say, $18,000 for the same service and now coming to pay me only $1,000 or maybe only $500 a year for it. And what happens is right now I'm losing a lot of the money that I should be doing on these guys. So the first thing I need to do is looking into my funnels, okay? One of the things you see, the sales funnel analysis, I want to see the persona that is coming in. I want to see that I have enough leads of companies that are really should be paying me more. That means that when I look at them, and especially, again, this is for the automatic guys that are selling, who's coming, what kind of traffic they have, how much usage they have on my system, and what kind of other tools they're using, okay? At the end of the day, you'll see that you have a lot of guys that are paying for other tools much more coming right now, which I didn't have them before, and they should be paying me more. In those cases, we need to move also very quickly in order to sell them the higher packages, both automatically, building, and that reducing what I'm giving in my micro businesses and freelancers businesses, and giving other packages that are relevant for the SMBs, both in automatic, but also in inside sales teams if I need to build them, okay? What I focus on, and the next point is focusing on deals that I can really close in a short time frame, the shorter time frame that I can. And you can see a lot of guys that are currently having two different segments. One is the guys that, customers that I can close within 9 to 12 months. And on the same time, I have on my plate guys that I can close within 3 months. When you have a sales guy that is bombarded on leads, it has between 30 to 80 leads a month, new ones coming in, and he's bombarded, that's a very, very bad situation, because what really happens usually is that your pipeline doesn't work well. Your sales guys cannot manage two different sales cycles, okay? And focus on the right deals to close. So if I have a customer that is really big, I can close them for $200,000. It's going to take me 9 months right now. And on the same time, I have a customer that I can close within 3 months, and it's going to be only $40,000. Where do I focus myself? And when I have 20, 30, or 40 of those guys every month, new guys, what do? And what you'll find, you have too many leads per sales guy, and not really focused sales guys. One of the things that did one of my companies, we divided the teams into the smaller deals, and smaller with regards to timing, and the longer times, and not really relevant to everyone. And there are guys that should be running in the same segment, but then that means that you have to have much less leads per sales guy. And you need to find what is the right number, okay? And it's not gonna be over 30. Each and every one of your businesses should look at exactly what you're doing there. Next point, focus on your pipeline. Okay, so one of the main thing, you need to look at the amount also, but you also need to look on the quality. There's a lot of non-qualified stuff that you're gonna waste time on. Look at that you're not wasting time on those kind of deals. I'm not gonna touch everything here. Let's dive into the next slide. Afterwards, if you'll have any questions, I'll be happy to touch them. The next point is churn. I'm going to tackle it in a different way also in the next slide, but here, this is mainly for the smaller micro businesses and freelancer churn. We have a lot of churn, these kind of players in all the different services that I'm involved in. And one of the main things that we implement always is allowing them to freeze their accounts. And that's very much recommended to do it, and do that proactively when they come into their back office and try to do it. Focus on deals that are profitable, which is again very, very important to do in these kind of times. And one of the main things for the mid-level and also for the enterprise guys, but also for the SMB, move into consultative sales. One of the main things that I'm seeing, majority of the guys just don't know how to sell in these times. What changed right now, we do have a customer that is a prisoner at his home, but he's looking for a real market thought leader. If you are not on the calls with your sales guy, if you don't listen to them, which I recommend you really to listen to these kind of calls, you won't listen, you won't be hearing them doing the mistakes. And the main mistake, they're selling your product and not selling value. The main thing right now is to sell value that solves real problem for your customers, and those problems changed prior to Corona versus what it is today, and you need to be there. So shifting the pitch of your sales team is crucial, and that's almost in all of my mid-level and enterprise companies, we did it. And can be, if you haven't changed your pitch, something is wrong. Next slide. Okay, a little bit regarding pricing. Again, this is very much related both to SMB, mid-level, and enterprise. So a lot of the opportunities right now enable us, since we're in a good situation, to start moving our customers in the right direction. So first thing, if I can, I move my customers from MRR into ARR. One of the main things is finding the right timing when to do that move. Not always it's good to do it too late. And you need to be smart about it. How do you move them with good proposals that do not harm the company? In a second, I'm going to talk about it. It's very similar to what I do from moving from ARR into multi-year deals. Multi-year deals are deals that I close for 2, 3, or 4 years in advance. The main thing is that we do give discounts in order to win this. Same thing like we do from movement from MRR to ARR. However, when we do this movement, we do not want to harm ourselves for long term. This gives us a lot of visibility for long term. This gives us cash now, which is also very important. But in order to reduce that, we need to use the game of usage or volume in our systems, which will allow us also next year and the year after to upgrade our accounts with those specific customers. So you need to put a limit and never do unlimited stuff there. But again, focus your teams on that, and also compensate on these kind of deals, which is also very, very important. Much more visibility and much more strength for these kind of companies. Um, now, one of the main things in micro businesses, when I sell into micro businesses and I want to move into SMB deals. So let's say one of my companies, we were selling a ARR of $72 for micro businesses, and we wanted to move into SMBs and selling them to an average of $350 MRR. And that was a very, very big change. What we had to do in order to do that was to do analysis of the current packages that we were giving to the micro businesses, see exactly how much we can reduce in order to allow ourselves that someone that is relevant for the SMB cannot enjoy from the micro biz packages that we're giving. Okay? Otherwise, it's almost impossible to sell because they're not stupid, and these times they're really looking to see exactly what you're giving there. So if you are going upstream, you want to have a higher ARPU, you have to look at your packages and correct your pricing there and see it. What you will discover that the SMB ones you can sell much more than what you really think. When we started the 350, we thought that's a lot, and then we got to an average of about $500. And that's something which was a very big surprise for us, but we were very happy to have that surprise. This is really relevant for the SMB, mid-level, and enterprise. I spoke about churn in the micro businesses, the automatic ones. But the ones that are not automatic, I know through the usage usually, am I going to lose these customers? You need to do this proactive, and I really can tell you that when we did these kind of offers for customers that we knew that are very risky, they are very high risk to churn, we came to them specifically with special offers. Every quarter, you know exactly what customers should be renewing. You know exactly what are the issues. Focus on what can you offer them in order to stay with you, even in these bad times. And that's something which is very important. One point that I didn't mention before, which is I want to get back to it with the multi-year. A lot of you guys maybe think that you can't close multi-year. One of the main things that I discovered when I started selling multi-year, it was in 2008. I moved several of my companies, customers there. The larger corporations, and that's exactly what I also have the same situation today with several of my companies. The larger corporations do have a lot of money and are willing to move into multi-year as long as they have a good discount right now, and they can show that discount. And that discount didn't really influence for me. It was much, much more important to have the visibility into my business. The next point is mainly for automatic sales. If I have a free trial, I want to check that my time is the right timing. If it's 7 days, 14 days, 30 days, whatever it is, I need to have enough time on one hand side in order to allow them to enjoy from it and learn about the value. But since I'm bombarded with leads, I want to reduce the time as much as I can when I'm bombarded. When I'm not, I want to do the opposite. I want to give you more time to learn about my product. So the ones that are not successful. Second thing is data. If I'm bombarded and everything is going very, very well for me, and previously I didn't ask for enough data, their phone numbers, their emails, whatever it is, or get them on the phone, they have to schedule a call, whatever it is. All those things that you previously thought you can't ask for because in any case, you're bombarded with leads and you want to have it, good leads that you can convert into good customers. And also, as I mentioned before, see what's included in each and every one of the different packages, including the free trial that you're giving, and that it's not going to harm you in selling the higher packages. One of the main things in agreements, whoever is selling mid-level and enterprise, you have the agreements, be very flexible on the payment terms, okay? One of the main things for us is to close quickly and win the market. And in order to do that, I need to shorten my sales life cycle. In order to do that, I need to allow my sales guys to get payment terms that maybe previously I wasn't open to, but as long as my sales cycle is going to be shorter from it, okay? And my conversion rates are going to be better. So getting payment terms instead of the year, like paying me paying the entire year in advance, you pay me every quarter, but it's an ARR deal, okay? Same thing with the opt-out. If I used to give only 1 month opt-out, and now I can close a better conversion rate with a 2 or 3 months opt-out, I'll give that, okay? Especially if it reduces my sales life cycle and also reduce my time to market, okay? Second thing, another thing which is also important with regards to your pricing if you have value-based or usage-based or volume-based, that's very crucial today in order to close these deals, especially in the middle of an enterprise. It's a two-sided thing that will help me, first thing, to close a better deal, but also afterwards, even if I give you a discount this year, hopefully you'll use more and I'll be getting more money next year from that volume that you're using on me. So that's the land and expand. That's a very, very good tool to implement today. Each and every one of you guys should know exactly in his company what should be done there. One thing that is not related to each and every one of you, but maybe it is, it's either I'm very profitable or I have a lot of money in my bank. If my competitors are in issues and my competitor didn't raise a lot of money or raised a lot of money, but it was like 2 years ago or 1.5 years ago, and they're currently struggling, and I have the ability to get all their customers, I become very aggressive in it. And one way to do it is to buy out the competitor's contract, which means that usually my customer is already signed with my competitor, and they have another additional 3 months before they finish their contract. I'm willing to pay for that 3 months in order to win this account. And I'll give him reduction on that, so he doesn't need to pay that. Okay, and that's an upfront money that they get in order to win it. But that becomes a war on pricing. In order to win it, you need to be strong enough. And to be strong enough means that my competitor is much weaker than me and not able to do it. And you need to do that analysis. But if you do it correctly, you can win the game. Next slide.
Yeah. So I'll take over on that one. It's going to be a bit slower for all of you guys. We covered fundraising on the previous calls, but if you're in a situation that your business is blossoming in these days, there are two kind of like buckets of companies. One is you won the lottery, you're on the right market, you have the right product, but you didn't fundraise recently, you don't have enough or proper people to handle the lead flow, the traffic that is coming, etc. In this case, referring to the time, how long it can last, you should act super, super quickly. So you should focus on securing proper funding quickly, on showing the investors the easiest and non-arguable proof of your crazy growth, and closing it, not optimizing for terms. So this is the case where you don't look for tier one investor for the best valuation. This is the case where you look for somebody that can sign a term sheet in a week or two and that can guarantee you the money in a month from then when you start the discussion. Because the time you're losing is the biggest cost right now for you. The second thing is you are in the same situation, but you have funding, you have right people. So the key question is whether it makes any sense to fundraise. And I would say it's definitely worth thinking of it, because funds like us look for such opportunities. We look for the companies that are experiencing crazy growth. So very likely the VCs will be happy to pay extra for such an opportunity. So you have everything that is needed to succeed. And even if you have the money on the bank account, it's still extra money can allow you to be more aggressive, to buy out competitors' contracts, maybe competitors, which we'll cover later, hire more senior people, or just, lengthen your runway. But here, as Ariel mentioned, it's a matter of focus of priorities. So you should also approach that only if you can close it really quickly and smoke out the funds, whether they are really interested and they can quickly close. In the last crisis, most of the funds were on a declarative level investing, but in the end, the amount of deals happening went down. And we know also today, and we've seen it in the processes where we are involved in different roles, that there are funds that are not really active right now are still talking just to see what is available on the market. So you need to be careful in order not to waste your time, because the time you spend on potential fundraising is the time you don't spend with your clients, you don't spend on hiring the top guys that are on the market, etc. Therefore, it's also the case you can go for the good opportunity, high valuation, but also time is of the essence here. And as I mentioned, like one of the uses of capital might be the M&A. This is the last thing we wanted to cover. Over to you, Ariel.
Okay, great. So again, as Michał said, it's not relevant to everyone, and especially in these kind of times that I'm so much bombarded with leads, in the good situations, I always think about where to put my time, especially as the CEO, and that's very, very crucial. So I talk about the two sides of M&A, both selling and buying, but there's a lot of opportunities that arise, and you don't want to miss them. And I'll also add to it an example of a friend that did a very, very interesting M&A in 2000, which came out to be a big company. So just with regards to selling the companies, okay, currently it's going to be very, very hard to sell companies in good or normal prices. So especially for the good guys that are in a good situation, there's no reason right now even to think about it unless you really, really have either something very interesting for to sell and you're already in processes, or you really have to. But in general, put it aside, and that's much less interesting. However, there are interesting ways to use M&A in order to do the growth. Same thing like we saw in sales. The growth can come both organically, which is what I'm doing right now in my organization, versus M&A. And that's something which a lot of the founders just don't think about, okay? And it helps me both on building my company, but also the guys that want to raise money, that really helps you to do good fundraising. Okay, so in order to get there, I'll start with how I do it, okay? But then also I'll come back to things to consider, okay? So, but one of the main things that I saw in majority of the founders in early stage, they just didn't know how to do it, and M&A is hard, both doing it, but also afterwards implementing the company. So the first thing I look at right now is just being able to analyze and see exactly what's in front of me, knowing all of my competitors, all the different players within my field, both direct competitors, both indirect competitors, and companies that should be interesting for me, either for their tech or for the team in the location that they are. All that list, I want to have it. In any case, I want to have it. And what I want to have it is exactly how much money did they raise, when did they raise it, okay? And what kind of situation that they are right now, at least from what I'm seeing from the outside, to understand, is this something which is interesting for me? And when is it going to be interesting for me? But if I have that list, I can start analyzing this, and especially on my nights and my weekends, to see exactly who do I really want there, and can I really buy it? Because you can buy things for cheap, and that's something that you'll find. And you can have very, very good deals that can help you afterwards grow your company. And what you'll find is that if you did this list, you created everything, exactly who's you're watching, and you start talking to them even, you'll see that you'll find interesting stuff. Again, not for everyone, but for the guys that it is relevant, you need to do it. How do I do it? This is a good way to come and do a very successful fundraising. And one of the things that if I tell a good story of taking 1 + 1 and getting to 4 from it, a lot of the VCs, even in these kind of times, would like to put the money on. So I'm a successful company. I have competitors that I can buy out right now, even bigger than me sometimes, just because they came into these times in a bad situation, which does happen, by the way. And I can come and tell a very interesting story that those investors would want to come in. So that's the first thing, how to do it. The second thing is not paying everything in cash. You can do it both by cash and also equity. And the third way to do it is paying a little bit of cash, but then afterwards paying it on an annual basis from future revenues. And that mix is the most easiest mix, I would say. If you don't have enough money, you can't raise enough money, but that's something which is very common. The third thing is, what do I buy? Not always I buy a company. Sometimes I buy an asset. Instead of buying the entire company, I want to buy only asset. I don't want to be in charge of all the debt or all the different things, or employees, whatever they have. So you need to know what you're buying. So I have companies that are buying only patents, let's say, of competitors that went bankrupt. So we had those kind of situations. Those patents, which usually will cost you at least $100,000 for each, we're able to buy them for very, very cheap. But that was very, very strengthful for us afterwards when the market came back. So each and every one of you guys needs to have that kind of a list, needs to be monitoring and see are you missing on opportunities? Because these opportunities could be much, much bigger sometimes than what you're currently selling, if you even sell the best that you can right now in the coming 6 months. Because those opportunities are prime, both on SEO and traffic that could be really crazy for you, on customers that you're buying huge amounts of customers, and on revenues that you can really grow. And that can really change the picture of the company. Last point of it, M&A is not only about finding and buying and doing the deal. The main problem is afterwards, how do I implement it into my company? And that's, it's a whole way how to do it. So take into consideration, you have to have someone knowledgeable enough within your team, either it's an advisor or a board member, I don't care what it is, but at the end of the day, someone who's done it and knows how to do it well and can really support you. But because at the end of the day, if I do the right implementation, I can really win the game. A good example of it, we can move into the next slide. A good friend of mine, Glenn Fogel, was in charge in beginning of 2000. He was the SVP of BizDev and M&A at Priceline. Priceline wasn't doing that good, but he did a very, very interesting deal in 2005, and he bought Booking.com for $135 million. At that point in time, it was like, okay, what are you buying? A European company? We're an American company. This is a European company, whatever. But as you all know today, there's no Priceline. They changed the name a year and a half ago, I think, to Booking when Glenn became the CEO. And today, the majority of the money is coming from that M&A. And that M&A grew to huge amounts of money, as you can see here on the slide. But what you can understand from it, even if Priceline would have done even good, it would never get to these kind of numbers. And the real strength of it is the something which is not only about finding the right deal, buying it at the right price, which here you can see like it's a joke of a price today to buy Booking at these kind of numbers. A lot of companies would have wanted it, but also implement it. And the ability to take the team, and he took a team from Europe and an American team from the US, and doing the right mishmash between these two teams and really succeeding in a sense that he let them manage themselves as a startup, which they continued running themselves as a startup for many, many years in that sense. And that's why they were able also to be successful afterwards, not only buying, but also successful as a startup and growing within an organization. So this is just one example. And again, you can tell yourself that this is a huge company today, but at that point of time, Priceline wasn't doing good and could have been even bankrupt at the end of that recession. And this really changed the ball game for them. So it could be that the M&A that is waiting for you in the coming 6 to 12 months out there could change the game for you and double or triple your business in a very, very quick time. And you don't want to miss on it. And I'm guessing a lot of you guys are in the financial markets today, and you're looking at the stuff and looking at different shares or different stuff. This is what you should be looking for your company. Okay? And you want to be, even if you don't do it at the end, you want to be, this needs to be visible to you.
I think here we have also a good example from like the Polish backyard, where Dog Planner acquiring Doctoralia, which had multiple times more traffic than they did, and then applying their sales and monetization strategies allowed them to become the market leader in the health booking space. So we wanted to flag that there is such opportunity. A lot of people don't think about it, and even if somebody is bigger than you on some level, etc., but you're doing good, it might be a great idea. I think like we're slowly moving to the discussion session, so just wanted to flag with you some actions I believe are really easy to take away with you. Like first on the hiring side, let's think about the companies that were strong companies, that were really well-run companies and got into trouble given the situation. And just browse their LinkedIn profile, look for the rock stars, give these people a call. The second thing, if you have non-critical position, just wait. It's like the labor market is changing rapidly, and you're gonna be in a much, much better situation 2 months from now. That's what we covered. On the pricing, you need to test your pricing. And also, like as with the pitch Ariel mentions, like if you don't implement pricing changes, probably you're not doing the max you can take. On the fundraising, as already mentioned, if this is the time to fundraise, see if you can really close something in a matter of few weeks from now, and then you're gonna know how it works. And on the M&A, we just discussed that. So would be happy to hear like your thoughts, both what you believe you can apply to your companies, as well as any questions you might want to have. Kacper, if you could please stop the recording at the moment.